Morning, everyone. I'm Fenwick Huss, Dean of the Zicklin School of Business, and it's my pleasure to welcome you to our webinar today on crypto assets and blockchain. Joining me from the Dean's office is Gwen Webb, who's the Associate Dean for Executive Programs, and Gwen will moderate our question and answer period. Today, we're delighted to have in conversation Charles Hwang, who's an alum, founder and CIO of Lightning Capital. He's also an adjunct professor in the Zicklin School and teaches a course on blockchain and cryptocurrencies. Joining him is Nizan Packin, Associate Professor of Law, who writes on legal and ethical issues around a number of digital technologies. Leading our conversation is Larry Zicklin, former chairman of Neuberger Berman, an alum, of course, our benefactor, and I'm proud to say that Larry is also a faculty member in our honors program. Larry?
Thank you very much, Fenwick, and welcome, Nizan and Charles. Charles, let me begin with you for a second. I know from a prior conversation with you that you prefer the name cryptoassets as opposed to cryptocurrencies. Why do you prefer it? What's the difference?
Yeah, well, thanks for that question, and thank you, everyone, for Baruch, for having me here today. There is a nuance to it, is that, I think nomenclature is very important on what terminology we use. And when I hear the word cryptocurrency, I see it more as money, as fiat currency to transact. And what people forget is that I like the word crypto assets because it's more than just a currency. There is an asset value to it. And that's why when I look at Bitcoin, there is this flawed notion that Bitcoin is supposed to replace the US dollar in a way of using it for Visa transactions, like credit card transactions. But that's not where I think Bitcoin will be. Bitcoin is more of an asset. It's a commodity. It also has currency features, but it's more than just a currency. It has these asset features where I think you can use it as a storage of value, as like a digital gold. And that's why I think the word asset in there is more valuable than just calling it currency, a cryptocurrency.
And you think it'll be used more as a store of value than as a medium of exchange?
Yeah, so if we look at Bitcoin specifically, I think it is definitely more as a storage of value than medium of exchange. I think the medium of exchange comes in that on higher value transactions. Bitcoin is not in a way that can be developed for high frequency transactions, but it does have what's called a layer 2 solution called the Lightning Network. And the Lightning Network can be used for that purpose. It has different security features. It can be done with, I could send you something less than a penny on the Lightning Network, and it can be done very quickly. But it is not as secure as the Bitcoin, what's called the layer 1 protocol, which is what we all know Bitcoin as. That protocol, I would use it where you're transacting with higher value transactions. Hopefully that makes sense.
Nizan, if crypto develops the way you think it might develop, how will the lives of ordinary citizens be better, or will they be?
So the thing with crypto is that it really enables us to do a lot of things that were much more complex or expensive or difficult to do before. So whether it's sending value or storing value, as Charles correctly pointed out, or whether it's enabling people to really upgrade their payment systems and use currencies such as Bitcoin to send money and value places where otherwise it would have been difficult for the people to even get a job and get paid, or get the money paid to them for their work without all sorts of delays and extra fees. So in that sense, I think with regards to the financial system, it's really, in many ways upgrading the payment system. But I also think it enables us to do a lot of different things, whether it's improving some governance systems, automating and using smart contracts in situations where it makes sense, enabling us to do all sorts of references or store information, send information in ways that we couldn't do before, or was much more complicated and much more expensive. So I think in many ways, it is fair to say that crypto is a democratic technology that really enables us to decentralize processes and use many of these decentralization advantages to our financial as well as corporate and day-to-day life advantages.
And do you think the beginnings of disintermediation will be recent immigrants sending money back home to finance their families? Is this the first step in disintermediation? Either of our guests can take it.
So I'll be honest, I don't necessarily think we just need crypto for that. I think there are other technologies, other innovative financial technologies that enable us to do this much more easily than in the past and in a fast and cheap way. So I think, for example, M-Pesa in Africa, using Safaricom was a very straightforward, simple technology using regular, not even sophisticated smartphones to send money almost like a text message. And when it was done through the telecom company, it really made the fees almost completely disappear. It was much cheaper and it was very quick and efficient. So I don't necessarily think we have to use the blockchain to do such things and upgrade our financial systems and our payment systems and be able to do these things like send money to other countries, cross-border payments. But I definitely think it could be very helpful in that sense as well, for various reasons. First, because in some places the value might not be stable, and if we can figure out a way to kind of get a payment that is done on for example, using Bitcoin, or in places where you couldn't get paid or couldn't send in a formal way your money. So that does enable us to do these things. I will say that where it gets too difficult or challenging legally in terms of anti-money laundering or other types of regulation, the lawyer in me has to point out that there's a reason why we have these laws and why we don't want to make things too easy and go and kind of bypass certain regulations that we've created.
Okay,
but
let me just move it then to another use. Forever, gold has been used as a store of value to offset government printing of money. Will this be a major use of crypto to replace gold? Is gold about to be disintermediated?
Yeah, so I would say that the one of the biggest advantages when we look at a protocol like Bitcoin is the fact that it's decentralized. And you can make the argument there are some disadvantages, but I think the advantages come in decentralization. We are not relying on a central party to make decisions for the rest of society. And what I mean by that is when we look at the Federal Reserve, we have the Fed governors make decisions on how they're going to deal with our monetary policy. And if you look at it, I think the recent statistics is that 70% of our existing money supply was printed within the last 2 years. And that is very scary to me. Whereas when we look at Bitcoin, it is capped at 21 million. It cannot be changed. And the only way it can be changed is through consensus. And I highly doubt we can reach consensus for that to happen. And when you bring up the fact that can gold be replaced, I really absolutely think it can be replaced, because when we look at gold as a storage of value, the biggest problem with gold is it's hard to actually spend it. And we can spend Bitcoin. One, as I pointed out, on the Lightning Network, you could spend it for lower value transactions. And I could buy high value transactions on Bitcoin too. I shared with you recently that I tried to sell my apartment with Bitcoin and no one would actually willing to park their Bitcoin for it, because I think they think that Bitcoin will go up more in value. And I really wanted that transaction because it would close a lot faster than our traditional banking system. And so that's where I think we start to see advantages with how this protocol can work. And
Charles, why wouldn't somebody, if they wanted your apartment, just go out and buy some Bitcoin and transfer it to you?
They could, but there might be some slippage to it. There's transaction costs with it. They'd rather just deal with US dollars at that point.
Okay, how big is the crypto market right now? How much are we talking about?
I mean, we're getting close to $3 trillion right now. Right, so, yep.
And how many?
Like 2.3 approximately.
Okay. And how many cryptocurrencies are around right now?
There are over tens of thousands.
Well, that can't last. You can't have 10,000 currencies competing with one another.
That's right. So I would add that part of it is this is still very much the wild, wild west. There are some tokens that shouldn't be in existence. There are some scam tokens. There's a lot of, when there's a lot of money and growth in a new industry, you get that wild, wild west characters that show up. And so this is where, when we talk, Nizan kind of pointed out AML and KYC, there's some balance of regulation that needs to be in place, but I think it needs to be well balanced. And ultimately, there's the camp of Bitcoin maximalists that'll tell you that Bitcoin is the only one that'll survive. And then there's another camp that will say, well, other tokens can compete within the same ecosystem because they fulfill different use cases. And ultimately, this will come down to which ones will generate the most network effects. It's like when you think about the internet, on how there were so many social media sites before Facebook really became the leader. We had MySpace, we had Friendster, and it's a matter of that getting narrowed down to which ones will survive, generate the most network effects that people feel comfortable using and has a good user experience.
And I think actually that point goes back to your gold question before, because I think a lot of it is trust. And at this point where we see so many scams and so much uncertainty and so many different crypto assets and coins that could be created, within minutes and be offered, I think it's still, the things are still at a point where there isn't that much trust yet still. And so we're not quite there yet in terms of replacing, gold or thinking of this as potentially the alternative.
Are the crypto coins that are in existence now different in some way, or are they the same?
They have, the way I would describe it is some of them have different use cases and are developed different. All of them are similar to some extent. It's a matter of how they created the protocol. If you look at Ethereum, they market themselves on the smart contract platform. Now, Bitcoin has smart contracts, just to be clear. It just works a lot slower, and it's a lot easier to develop on Ethereum, which is why people are using it. And so that's why they're using it as a smart contract platform, which has resulted in different industries within that, which is we are seeing what's called decentralized finance, or DeFi, and NFTs, which is non-fungible tokens, or digital art, digital content. And that's what's being built on those type of, in that particular protocol.
Am I correct that the plumbing for all this is blockchain? And if so, are we becoming overly reliant on blockchain?
Yeah, so the underlying technology is blockchain. And I think maybe we could take a step back and just define what that is. And what it is it's really a decentralized, distributed, immutable database. And it is very important to note that—
What does immutable mean?
Immutable means that it cannot be changed. So if I decided to send you some Bitcoin, I can't come back and say, well, give me my Bitcoin back. It is done. It's a completed transaction. It is final settlement. It is very different from your Visa MasterCard transaction or Amex because of the fact that you can still dispute a transaction. I cannot dispute a transaction once it's sent on the network.
And also you won't be able to change the record. So the record would reflect what it is, and that stays for everyone to be able to see, and that's the final record.
So unlike Wall Street, which settles trades over a couple of days, this settles the trade in an instant.
That's right. And that's one of the greatest things of it, the fact that we have final settlement right away. Even an ACH transaction, automated clearinghouse, does not settle right away. It's one of the reasons why some crypto exchanges will not accept an ACH transaction, because you have, I forget, maybe Nizan, you might know this since you're a lawyer, I think it's like 60 days you can dispute an ACH transaction. That's scary, right? So, the games that scammers started to play was, well, let me ACH some money into my crypto exchange account, buy some Bitcoin. Oh, Bitcoin went down. Let me dispute the transaction. Now it's a fraudulent dispute, just to be clear, if you disputed that when you actually moved it in, but they dispute it, and that's how they, get their money back. And so there's different games that people have played.
So while I agree that this type of, unethical buyer's remorse or illegal buyer's remorse is obviously not ideal, I do think that the need for speed does come at a certain price tag. And so there's a reason why, historically, we've always wanted to have the ability to question or appeal or second guess things, certainly when we're talking about high volume financial transactions. So to me, while this is a great advantage, there's also a disadvantage there, which needs to be carefully regulated and figured out, because issues have already presented themselves. And this is something that we need to, also do some, I think, financial education around and understand better, because it's not the way we used to do things.
I noticed yesterday that HSBC and Wells Fargo are cutting out a key part of the currency market's infrastructure by trading these currency transactions between them using blockchain technology and eliminating the middleman. The middleman, CLS, was always there, as it is in security transactions, to obviate the risk of certain failures on behalf of one party or another. These two banks, HSBC and Wells Fargo, are now trading one to the other without CLS. Another example of disintermediation?
Yeah, I think what we start to see, and I think what we'll see with this technology, is it starts to disintermediate middle people who don't add any value to the transaction. When we look at blockchain and how it's this immutable database, it helps keep track of our transactions. And it could be utilized in other use cases, such as title of real estate, such as the idea when you use that particular example with securities. Because one of the biggest problems we witnessed during the financial crisis was that CDSs, it was hard to know who owned what CDS. And there is also, when we saw the GameStop situation, who actually owns security? Because there was that point where 120% of the outstanding shares of GameStop were short. How can we go over 100%? We've lost a good track of record of how to actually monitor who owns what security. And so that is very scary to me as a shareholder of any publicly traded company. And so it is important in a blockchain, we have a transparent record. And this is what I love about a blockchain, is when we look at Bitcoin, I could see who actually owns what. Now, I may not know who that individual is, but I could track the wallet addresses. And there's some wallet addresses that's been identified, but it is completely transparent.
Well, this transparency is interesting. I just want to point out to our audience that the currency market trades about $6.5 trillion a day. And when you see the first two banks bypassing the middleman, I learned from one of my mentors, he used to use the expression, after A comes B. Once these two banks get it down pat and seem to do it and save themselves some money from disintermediating the middleman, seems to me it's only a small step forward to two other banks do it. I mean,
yeah, and I'll add that is the discussions that I've been having with some banks, is that, we talk about this idea of disintermediation and, this is going to get rid of the banks. That's a narrative that we're hearing in the media and the press. But ultimately, what we've learned from the financial crisis is people still trust the banks. They want their assets with the banks. And what I believe will happen is the banks will learn how to function in this ecosystem and work with people who want to hold assets and crypto assets and leave it at the banks to hold custody of. And the banks can charge them money. And I think there's a lucrative business there for the banks to jump on board with this. It's kind of like the analogy with Kodak. Kodak didn't want to embrace digital cameras, And we saw where their business went. And if the banks embrace this new technology, this new ecosystem, they can make a lot of money doing it. And I think that's what the smart banks that see that will start to embrace it and move in that direction.
I don't see where the banks have an alternative.
I agree with you. I mean, that's my biased viewpoint, that I think that they need to start thinking about this, and the ones that do will rise to the top.
But I think it's something that we're seeing in a lot of different fintech industries in terms of the bank's development and growth. I mean, open banking is another example of something that initially banks were less interested and reluctant to sort of embrace, and now we're seeing this happen sort of all over the world with regulation or without. And so I think this is something that is happening because the younger generations are interested in that, and there's a lot of pressure on banks to kind of move towards these technologies, embrace them, use them more.
Are there statistics that indicate that this technology is being used mainly by younger people? Do we know that?
I would say it's on the younger side. There's some stats on it. It's hard to know how reliable those stats are, but it tends to go to the younger generation.
And also, surprisingly enough, more women in the last year. So initially it was more male dominant, but now we definitely see more women getting involved in crypto, and that's an interesting trend as well.
Nizan, you raise an interesting point, I think. In many societies, women are discriminated against and can't have bank accounts or can't do a lot of things that men can do. Will this break that pattern? Or might this break that pattern is a better question.
So those advocating for crypto are definitely saying that there are already countries around the world where women can't own a bank account or can't get paid or get a job, are able to do things online remotely, or and get paid with crypto assets, and are actually doing that already. So that's an interesting trend. There have been a bunch of articles covering this trend in the last few years, even pre-COVID, but now even more so when much more work is being done remotely. And I think that's a very liberating, encouraging trend that we're seeing, and I think that's a great thing.
Yeah, I want to add that. I mean, there's been some great nonprofits that have been helping empower women. There's, as you said, there's certain countries that don't allow women to open up bank accounts. They need their husbands to help them even open it up if they're allowed. And so there's this one nonprofit in Afghanistan where there's a woman who basically teaches women how to code. And because they can't open a bank account, they've been accepting Bitcoin, because Bitcoin you're allowed, anyone could just download a wallet on your phone. As long as you have a smartphone, you download the wallet and you can receive payment. And it is a bank within your phone. And so it gives women who can't open up a bank account now some more power, because there are stories of this. If you start to listen to this nonprofit, and the nonprofit name slips my mind right now, but they've been helping women leave abusive relationships. They've been helping women to accumulate assets. And so it is very empowering. And this is such an interesting technology in that it really will, in my viewpoint, it's going to empower people who don't have identity, who can't open up accounts in countries where they don't have a good record of who you are. And now this gives an opportunity for poorer nations to embrace this, to build assets, to maybe leave the country as a refugee if it's a very bad country, and start all over again. And be able to bring assets with them. And so I think one of the problems in our country that we don't see why could this technology be revolutionary is that we have a great banking system already. It works for us. It works well, despite of what we've gone through in the great financial crisis, that it works well for us. Whereas in other countries that are embracing this, they've seen hyperinflation, such as Argentina, Venezuela. They've seen issues where they don't have a structured banking system. Afghanistan doesn't have a good banking system, which we as a country try to fix, but unsuccessfully. And so this is where these payment protocols have a huge advantage in helping these less developed countries empower their citizens there.
So 2 quick points on that, if I may. One is that one thing that we do need to keep in mind is that sometimes these individuals that are underserved can work and get paid using cryptocurrencies. But the one thing is that they're not always able to redeem that. So they might even be millionaires on paper, but not actually be able to access those funds. And that's something that is still a very relevant point in many countries around the world because of various reasons, because of regulatory issues or hurdles or delays or anti-money laundering, all sorts of other legal issues. And then the second thing is that, as Charles correctly points out, we've been privileged in the US to have a great financial system in many ways, although we do have a large underbanked and unbanked population that could benefit from more financial inclusion. But having said that, there are many countries around the world where that's not the case. And so in those countries, they're even exploring all sorts of possibilities of using the blockchain technology to come up with a central bank currency because of these reasons. And I think that Charles is right that it could be a major game changer in that sense.
Even in the United States, I think I read somewhere that 5% plus of the population is unbanked.
I think it's a much higher number than that. I think.
Is it really? I mean,
yeah, I think it's
even
30
at
million.
5%, that's 15 or 20 million people.
I think it's like close to 30 million people that are unbanked or underbanked. And certainly in terms of financial inclusion, fintech in general, and particularly cryptocurrencies and crypto assets could be useful in that regard if used properly.
I just want to add, I think we're starting to see different ecosystems start to accept, crypto, especially Bitcoin seems to be, appears to be the biggest adopter, where those ecosystems are only using Bitcoin to transact in, which I find very fascinating, especially a country like El Salvador and El Zante, which is what's called Bitcoin Beach. They're only transacting in Bitcoin. Now, we're in such the early stages of this that I think, that you're going to encounter some problems we still price everything to the US dollar. So when we think about Bitcoin, everyone's asking like, oh, how much is Bitcoin? Well, we're pricing it to the US dollars. That's how we're pegging it. But really the real peg to me would be a basket of goods. What can that one Bitcoin buy you? And in the end, is it increasing in value? Are those basket of goods increasing? There's this meme out there of a shopping cart, and it shows like the years that go by, how much food you can buy with the one Bitcoin. And in the beginning, you could barely buy anything. And now you could buy it, your shopping cart is overflowing with food. And so that's how I think we eventually need to change our mindset in understanding, when we start to think about crypto, what is that basket of goods by us? And start to separate from the US dollar. And that, I think, is when we start to reach more mass adoption, and we'll be able to transact peer-to-peer with Bitcoin.
That is such a great example, because I really hadn't thought about that. But if you think about it, we talk about Bitcoin being wherever it is, $60,000 or something like that. But inflation 6% over the last year or something approaching 6%. And suddenly, if Bitcoin stayed at 60,000, it's appreciated 6% in terms of buying capacity. So
That's
we could
right.
create some type of a Big Mac index for our purposes and peg it to the Bitcoin.
You talked about the transactions being open and available. Excuse me. Is there an invasion of privacy anywhere here?
There's talks about that in terms of financial privacy. There's always a two-edged sword to this, that you could keep your transactions private by not revealing which addresses belong to you. But there is a value add in the transparency, in that we know that there's only a certain amount of Bitcoin that's in circulation. We know which addresses own them. And so if there was, I would argue, if there was a money launderer on that using it, well, we could track that, and we would track it to know who the money launderer is, who's the terrorist organization using Bitcoin, which is why when you have a company like Chainalysis examine it, they have said that less than 1% of all Bitcoin transactions are used for illicit purposes. And really, they also pointed out that the US dollar is still the key mechanism used for illicit activity. You're talking about it's like tens of trillions of dollars used for illicit activity, whereas for Bitcoin, you have just Bitcoin alone is like $1 trillion that it's just not big enough for that. And so the question then remains, when we think about that, do we ban the US dollars because it's used for all this illicit activity? We don't do that. I think the narrative is important when we start to think about that.
Just educate me a little bit. If Bitcoin were used by the government, would we have a greater knowledge of where our money is going than we have today?
Yeah, so this kind of also alludes along, like if we talk about CBDC, central bank digital currency, because a true CBDC would be totally transparent. And if the government were using Bitcoin for taxing citizens with Bitcoin and spending Bitcoin on projects, we would have transparency to how our tax dollars are being used. A true CBDC, in my mind, will work the same way as Bitcoin. And we as citizens can monitor how our politicians are spending our tax dollars. That recently I read an article in the New York Times about a nonprofit in New York that was stealing taxpayer dollars to over $100 million. And I think now we as citizens, if we were to use a Bitcoin network or a true CBDC that's transparent, we can track where those tax dollars are going to. We can make sure it's not being used in an illicit transaction, or that it's not being used in a fraudulent manner. I think that would be so powerful for us as citizens.
So it's actually, I think I agree with much of that, but I also think at the same time, many crypto advocates will actually tell you the opposite. They view CBDC, central bank digital currencies, as sort of like almost like a veggie burger. Like if you wanted to maintain a lot of the advantages of the blockchain and anonymity and all that, and privacy, why on earth would you give the government all that information and have them be able to track every single thing you do? So that's a point that many raise as well in terms of the CBDC. But I personally also think that there's another added layer here, and we should be mindful of the fact that obviously every time we use digital wallets, there are a lot of privacy issues, a lot of consumer data issues, and that's even not necessarily related to the blockchain. It's just generally whenever we use digital wallets, there's a lot of consumer financial data, relevant, discussion kind of material that we need to understand and better address. But I think in terms of the anonymity in general, the blockchain does enable more of that. And while Charles does point out that there are ways to figure out anti-money launderers and get back to and figure out who is behind addresses, there is much more anonymity than in our regular payment system, and that's something that needs to be clearly understood, I think, for better or worse.
Well, I want to just kind of tackle this a little bit, because I would say that even in our current system, like the CBDC, there was a question raised on would it be decentralized? And I think most of what we're seeing is that it is centralized, which I would make the argument it is not a true blockchain. And it's very similar to what the digital dollar is today. So that's where I get very confused of what the government wants to do. What is a CBDC? How is it different from the digital dollar today? But I would say that even with our existing banking system, we don't have much privacy as citizens. It is being monitored consistently by bank software. And I would, if you would to argue with me it's not, I would challenge you in withdrawing $9,000 in cash for the next couple of weeks and watch your account get frozen very quickly, because it will be deemed as structuring, and that is considered an illegal transaction. And so they could freeze your account for an inordinate amount of time until you give them a good answer of why you did those withdrawals. So there are certain transactions that happen within your bank account that, I worked in AML, And that if it gets flagged and you did those transactions, you are deemed guilty until you could prove yourself innocent. And so that, I think, is very important to know, that your transactions in a bank account are not as private as you think they are.
All right,
No, I agree with that. And one more point I think is that many economies are moving more to using, digital payments. And so we're seeing sort of many countries kind of challenging the use of, of cash and limiting, cash usages in regulation. And while some countries like Sweden are already only using 1% of cash, and a lot of their, financial transactions are rarely done, using cash. Obviously, when everything gets recorded, there's more, transparency, less money laundering, more, less tax evasion, more, monitoring. I agree with all these points.
okay. What do you see as the biggest negatives in crypto?
I think right now it's the fact that it's, as Charles was saying before, and the, head of the SEC stated in interviews a bunch of times, still the Wild West in many ways. We need more regulation. There is regulation. This is not to say that there isn't, but we need more of it. And we need to get rid of many of the scammers. There's an issue of trust. Anyone could pretty much create a cryptocurrency and start, offering it. And so I think we need to kind of clean things up and make them more regulated, more clear, more predictable.
Yeah, I agree with that sentiment that, the biggest thing is what it comes down to is regulation, and how we just need to clean it up. We need it to grow up, right? It's Bitcoin was created in 2009. It's 12 years old. What I always tell people, it's a 12-year-old kid. It's still growing up. It's still immature. And in time, it'll grow up to be an adult. We're just not there yet, and we got to give it time. Time is all we need with this, but also I think it's got to be a good balance with the U.S. government, that we don't end up being over-regulating this in this technology, that we end up killing the industry here in the U.S. That we want to be forward-thinking about this, and that there's got to be a balance somewhere in the middle, where we still regulate it to clean it out, so it's not the Wild West, and then it becomes that it starts to develop here, and the talent is here, and we create jobs, and we help our society grow in this ecosystem. That's what I would like to see in this space.
Who do you think will ultimately regulate crypto? Will it be the SEC? Will it be the CFTC? Might it be the Treasury Department?
It could be all of them to some extent.
I was going to say, so with regards to the internet, there's an old joke in the legal world that initially they said, who's going to, under what category will you, do internet law? And will be like the law of the horse, just like a separate thing. And then eventually everyone figured out, it's going to be in every aspect of life, because we use, the online environment and internet for everything we do pretty much today, right? So whether it's children's rights, whether it's contracts, whether it's corporate matters, right? Whether it's the environment. And so I think it's going to be the same, that it's not one category or one regulator that are just going to interact with the crypto world and regulating it.
My experience has been, if everybody regulates it, nobody regulates it, because they don't get together and there are lots of loopholes. If you had your way, how would you like to see the regulation be created?
So in my viewpoint is, I think we haven't properly defined this space, and that we haven't properly defined what this actually is. I think we need to develop new vocabulary, nomenclature around this, in the sense that this is a new asset class, and we haven't seen a new asset class in our lifetimes until now. And that's where I think we need to start focusing on that, and then educating folks around this. This is why I've been teaching at Baruch on this for the past 4 years, because I think it's so important to educate people around this. And then we get to the point where maybe it's a new regulatory body, maybe it's an SRO, self-regulatory organization, that comes together to start to regulate, to make sure that the actors in the space are behaving properly. Because ultimately, when you look at the IRS that calls Bitcoin property, or if you want to generalize it, crypto, they call crypto property. It's not really property. CFTC will say it's a commodity. It's not really a commodity, right? SEC will say, well, some of them are securities, and you can make the argument they're not really securities because you have no equity ownership in these tokens. And so, what is it really? And that's a discussion I would like to see start to open up. Is how do we truly define what this is? Because in the definition I shared with blockchain is that I don't think CBDCs are a true blockchain. And if it's a private blockchain, is that really a blockchain? If it's these blockchains where if you just have certain people that can join, I would make the argument that's not a true blockchain.
Do you think government will eventually create its own crypto?
It could, or take. The thing is, I think when we think about new crypto, is it better than the existing ones already? And when we think about how governments behave and what they build, is governments work well in some situations, does not work well in other situations. Meaning, governments do a great job generally of fixing our roads and our infrastructure. Generally, that's the case. But they're not good at private enterprise. So if you had a government start to get engaged in private enterprises, like any business, it doesn't work efficiently. It works better in the private sector then. It's kind of like saying, would a government set up a social media site? Because Facebook's collecting all our data, we don't trust them. Let the government create another social media site and do that. And no one will embrace it. And I think that's what it comes down to in my mind, that will a government be able to create a crypto asset that's better than the existing ones? I find it hard to believe that they could do that and that it would be embraced and that it will have large network effects.
I think it depends. I mean, I think if it's a CBDC and it's a central bank digital currency and everyone has an account, then it's a little bit different than competing with Facebook and creating a giant government entity that owns and holds all our information. I also think the sentiment towards that would be very different in the US versus the EU. But I think with financial matters and maybe financial inclusion and enabling everyone, I mean, I can only imagine some of my students, for example, if I told them that instead of worrying about, an FDIC insured bank that only covers up to, let's say, $250,000, you can get the same interest rates or the same, terms, but have your account at the central banks and it would never go bankrupt and it will always be stable and you'll always be able to access it and everyone has an account. I think it might be viewed differently than a giant social media platform. But I do agree with Charles on the innovative front and the ability of the public sector in general when developing innovative technologies or managing brand new large scale operations that are tech based, and I think that's a valid point.
Well, then let me ask you this. You talked about scams before and the fact that it's the Wild West because it is so new. How should the public protect itself against these scams?
Education is key. Education, learning about the technology, learning how it works, and when you deal with it, is that don't get inspired by the money aspect of it. Really understand. When I first got into Bitcoin, it was not about, oh, I want to make a lot of money. It's understanding the technology. And when people take that time for education and learning the technology, there's an aha moment. And I would also say that while you're learning, it's to actually use it, to actually download a Bitcoin wallet, buy some Bitcoin, put it in the wallet, spend it, go out and try to spend it, change it with people. Because we could spend a whole lecture talking about it. And it's, to me, it's like we could spend a lecture telling someone how you ride a bike. But until you actually go and ride the bike and experience it for yourself, you won't really know how it feels to ride that bike. And it's the same thing with Bitcoin.
Yeah, I do think that this is a little bit different though, because I think the average consumer out there has no idea. This is combining the worst of, I think John Oliver at some point said, like, what is the blockchain? It combines your worst fears, technology and money, and into one thing, right? And so I think, for most people, understanding technology is already challenging. Understanding online contract is already challenging. And then you add the financial element to it, and you lost them like long ago. So I do think that financial education is a key issue here, and we do need to increase financial literacy. The OECD even measures how countries doing that, and I think that's something we need to step up. But I also think we need a little bit more, and this is obviously my own personal view, more of a paternalistic, legal ecosystem, right? And what do I mean by that? I think a lot of the purchases and the interest in crypto is driven by FOMO, fear of missing out. And so I would regulate a lot of, related industries that are overlapping the crypto commerce, right? And so, for example, what do I mean by that? Influencers, right? We see all sorts of, FinTalks, which are TikToks with finance, or right, YouTubers that are uploading all sorts of really reckless things. And I think, when we have, Gen Z and Gen Alpha born investors, scrolling through hashtag give me top 100, sold cryptocurrencies and videos like that, I do think we need to, regulate around social media, around influencers, around caps of investing, certainly for, new investors or newbies that are just joining this, relatively highly sophisticated, financial, sector. And so I think we need to do more in terms of protecting consumers. And, obviously FINRA and the SEC have solicited, public, calls and comments on how to regulate digital engagement and, sort of better address these technologies in terms of consumer interest and gamification and online interest. But I think we're just at the infancy of all of this, and we need to do a better job quickly.
I just want to add one thing there, because I think you hit upon some very interesting points, which I think the education piece is so important when it comes to financial literacy. But I want to add another piece of it, is that I think we as citizens need to also think critically. How many times when it comes to investment decisions do we say, hey, how'd you figure out how to buy that? Well, my buddy Jim actually told me to buy this when we're at the water cooler. And we don't spend the time to do some research as to why should we buy it. And this is where I think it's so important to think critically. It's a piece that I add in my courses to ask my students to think critically, that I think in our school system, we're not teaching students to think critically anymore. We just go along with what's told. And I agree with, look, there's some points where we have to regulate to protect people, but I think we have to, as citizens, start thinking critically to know what decisions are good for us as an individual, what can help us as a family. And I think that is so important, that we don't put blame on other people. When I look at the financial crisis, one of the things that came out from that was we're blaming other people, where we have to take responsibility sometimes for bad financial decisions. And I do think a lot of it is, as a society, we have to start educating folks more about it. I think that's why financial literacy is such an important topic for me. And I totally agree, Nizan, that I think we as a society need to focus on that. So then when someone says, well, should I take a mortgage that I can't pay for, but the bank says I can take it, we start to think about that and say, well, those monthly payments don't make sense. I should not do it. Just because a bank says I could do it doesn't mean I should do it. And just because my friend just bought some scam token doesn't mean I should go buy it too. And let's not always listen to what Elon Musk tells us too. That's my 2 cents.
Meanwhile, he's selling stock.
He is selling stock, that's right.
Big. Gwen.
You're on mute, Gwen.
Gwen, you're on mute.
Thank you. That was a great conversation, and there are quite a few questions. Actually, the last one that came in, Charles, is for you. What courses do you teach?
Yeah, so I teach a course. It's under CIS 9551. It's a blockchain crypto asset course. I've been doing it for the last 4 years. It's a graduate only course, so hopefully they're a graduate student. It is an elective, so you self-select to come in. It is always on a Friday morning for 3 hours. So it's a true test if you want to come to my class or not. And hopefully you're not drinking the night before, especially for MBA students. And so, and I bring some guest speakers in the industry to come in to speak to the students, help the students network. So for those of you who want to learn more about it, obviously I'm biased. I think it's a great course where you could also network with professionals and break into the industry.
Thank you. Actually, Nizan, what courses do you teach in law or are taught in law that touch on these issues?
So I teach two general financial technology regulation courses, so fintech courses, discussing the legal and policy aspects of all the new, emerging technologies that we're seeing. The blockchain being one of them. Where we discuss crypto assets and related stuff, but we discuss other fintech issues as well. One for the undergraduate community and another one for the graduate level.
All righty. There have been several questions actually that came in regarding non-fungible tokens. Some of them actually are dealing with real estate tokenization. Others questions about, are there tokens for other things than digital art? Could one of you, Nizan or Charles, comment on non-fungible tokens?
Yeah, the non-fungible tokens are essentially you're taking content and digitizing it. I think where I see this space really going, and I find really fascinating, was you actually empower the artists. And so artists being musician or an artist that creates a digital art, where they can receive future royalty streams from that digital art, digital content. And so they're not bound by, let's say, if you think about a musician, by whichever company they work with. And so they can have rights to their content. When you think about an artist, think about a Picasso painting. When that Picasso painting is sold, Picasso's family doesn't receive any proceeds from that sale. And so in the digital art realm, you can set up a royalty payment that the original artist or their family member will receive a percentage of whatever the sale price is. So that's how it is. Now, part of it is what I think some people don't realize that they're buying on the NFT art is that right now, because it's so nascent, you're really just buying a link to the art on the NFT. You don't actually own it. And there's controversy on, well, I could just copy it and I can have this whole digital art. And that comes back to the conversation of storage of value. Where do we receive our storage of value? And when you think about the real art world, which I don't know much about, is that, and I try to educate myself by going to Art Basel recently, is that you can have a piece that, if it is, from what I've learned, is if you have a piece that might be a copy, but an auction house deemed it's authentic, it still maintains its value. And so I think that's all very interesting. We'll see how this space develops, and I just think it's very new.
Okay. There actually were a couple of questions about El Salvador, and there's a couple of questions, but one of them is basically, what was their motivation in doing it?
So I think different countries have different motivations in terms of whether they are interested in advancing their CBDC projects, or in this case, adopting Bitcoin as a currency. And I think it really depends on various things, such as how volatile is their current currency, and what is their economy looking like, and what they think they want to achieve by this. I mean, obviously, this is meant that the adoption of Bitcoin was meant to be a solution to various problems. And so I think, now they're at the stage that they're encouraging everyone, obviously, to adopt by, suggesting that whoever downloads the digital wallet gets $30 worth of the Bitcoin, and hopefully they can sort of normalize and, reach a more stable, financial market. But I think that it's not, people tend to compare, and I think different economies do different things because of their financial systems and their currency. So what's good for one country is not necessarily good for another.
Yes, can I just follow up for 1 second? if you own some Bitcoins and you die and you don't pass on the formula, the code for the Bitcoins, what happens to those Bitcoins?
It helps everyone else that has Bitcoin in that it is gone and you just decrease the circulating supply of Bitcoin. But ultimately you need an inheritance.
10 attempts, right? You get 10 attempts.
Yeah, but that formula is a pretty large formula.
Right.
If you don't know it, you're not getting it.
Right. I'm joking. Actually, there's an interesting startup now, completely not related to crypto, but addressing everything relating to death of a relative. It's called Empathy. I'm not, I don't have any stock or interest in promoting. I'm just saying, and they're sort of trying to look at an overall solution for everything related to the, passing of a family member. And I think one of the issues they're trying to address is, passwords and codes and things like that to kind of automate and almost make this process. Because you're right, and we see this in many different, aspects of our digital life, but certainly if you're very much invested in, crypto. So that's, I think, one of the things that, these types of new companies are looking into simplifying.
I'm sorry, Gwen.
It's fine. There's a lot of interest in the energy consumption associated with Bitcoin mining. Is Charles, Nizan, is that something that you feel is a concern for the industry as a whole?
Yeah, but I'll let Charles start because I know he feels very passionately about this.
Yeah, so I mean, essentially when we think about, and this is very specific to Bitcoin, uses what's called a proof of work function, where it uses, it does use energy. And I would make the argument that for some reason, the narrative in the media is that, well, this wastes a lot of energy. And I would make the argument that this energy shows that we put work in to create the new Bitcoin, which is what's newly created called the Coinbase transaction. And we put work to create that. And without that work, you wouldn't create the Coinbase transaction. And so now there's value with that new token that was created. Eventually, there's something called the halving event that I'm not going to get into, that you get that cap of 21 million. But that is essentially what's happening. Now that narrative is very destructive for the ecosystem, because when you look at Bitcoin miners, they tend to focus on green energy. And so the largest mining operations all hover around hydro or solar, because they need to keep their costs low in order for them to mine new Bitcoin. And so it uses very little energy. So realize this, is that one of the problems with electricity is that we can't transport it. So we have Niagara Falls, that is in upstate New York, that has all this excess electricity and they can't use it. And so when you have the miners come in, well, they're buying that excess electricity. This is why we have in upstate New York, old Alcoa plants, steel plants that are scattered throughout the St. Lawrence River, capturing that electricity. And so this is why Seattle has a big presence. We're starting to see also, what's also interesting is flare gas. So natural gas mining creates this byproduct called flare gas, and that gets burned into the atmosphere. And so there are now companies taking that energy and turning it into money by turning it into Bitcoin. And so that's happening. Now, this narrative is also interesting in that we always push for this ESG standard, and we only focus on the E, which is the environmental. So I just explained why I don't think it's environmentally destructive, but I also think we don't focus on the S and the G, which is the social and the governance. And Bitcoin has one of the best governance structures ever as a decentralized protocol. And also socially, what we talked about earlier, how it can empower other people in developing countries, like women who don't have access to bank accounts. And so if you fall under the ESG, it works perfectly. It's like the perfect company under the ESG, if you want to call it a company. And so I think that is the narrative that the media needs to start focusing on, and that it's not environmentally destructive, because what's destructive is the fact that the Federal Reserve only has to hit extra zeros on their keyboard to increase our money supply. That's inflating away our purchasing power. That's my viewpoint on that.
Okay.
I will just share. I will just share one funny anecdote. So when the Chinese central bank decided to ban crypto, they did say that it's because they're very concerned about the environmental aspects of it, and I just found it a little bit ironic in terms of narrative, knowing that China is not necessarily ranked the #1 most concerned about, the environment. But obviously, there's, truth to what Charles is saying in terms of narrative, but clearly, there's, what we know about, energy and consumption.
Yeah, and I'll add, like, when we think about the US dollar, of how much our current financial system spends on energy, on the banks, and also if you want to say, you can make the argument that, well, where does the value of the US dollar comes from? A common answer I get is the US military. And so how much money do we spend on energy to keep the military in place, to, establish our stronghold in the world? And so all that uses energy. And we don't calculate that into the calculation of how much is actually used to keep our US dollar secure.
Thank you both. Our hour is up, and there are many more questions still coming in. We have barely scratched the surface on this, but I want to thank you, Charles. Thank you, Nizan. Thank you, Larry, for a very interesting discussion. And there's so much interest in this that maybe we should reconvene in a few months and pursue some of the other questions. But thank you all very much for a really interesting conversation.
Thank you so much for having us.
Thank you, Charles. Thank you, Nizan. Appreciate it.